Welcome to Real Estate Radio Live, an informative and engaging hour discussing everything you need to know about the world of real estate. Your host, Joe Kuchera, provides you with insight and guidance on how to buy, sell, finance, and invest in real estate. He also offers real estate...
Real Estate Radio Live, welcome to the show today. We're with you 5 days a week, Monday through Friday, and I'm here with my partners on Friday, Bobbi and Buddy. Good to have you guys back. It's always fun to do our shows.
It's always great to be here on a special day like today.
It is. This is Christmas as you're listening to this show, but full disclosure.
Full disclosure.
We're pre-recording this,
We're
right?
pre-recording.
Is it safe to tell everybody that?
I think we have to. Otherwise, they think, what's up with these guys?
Yeah, come on.
Or they try and call in and nobody's there.
Right. Well, we know they love real estate, but come on, take a break. So we are going to be doing that like the rest of you. It's a time for family, friends, memories, creating memories, and certainly times to give back and think of many, many different things to do. Those that are less fortunate, we can go on. And so we are going to take some time. But at the same time, we thought it would be a great time to do 2015 real estate market review for you. And so a couple different ways you can reach us. And text is really the best way, 650-346-5352. You can text any questions to the show or email joe@reradiolive.com. We're with you again 5 days a week, and you can contact us during the show for text line. Also, remember, we have those podcasts. We're really excited about those moving along well. You can take us and listen to us anywhere. If you want more information about downloading those podcasts, you go to iTunes, Stitcher, Tuned In, Pocket Cast, and also to the website, reradiolive.com. So here we are on Christmas, a review. Can you believe 2015 is coming to an end, you guys?
No.
Oh, flew by.
Hard to believe, huh?
Flew by. It was a blink. We were just doing the Hawaii shows in January.
Right.
We'll be doing some soon again.
Yes, aloha.
Hint, hint.
Oh,
Yeah.
well, that's not very Christmas.
So we can let the cat out of the bag, right? So we guys are going to do some Hawaii shows next month, right?
Yeah.
January?
Absolutely.
Yeah.
Absolutely.
Yeah, we'll probably do 2 or 3 from Hawaii again, and
We'll do
everybody
the
loves
recap.
to find out what's going on in the Hawaii markets because that's sort of our Caribbean.
Sure.
Yeah.
And you know what's fun, Joe? We look back, and Bud, too, we look back on the predictions that we made at the end of 2014. We're pretty much on.
Yeah,
You know,
good
people
point.
were saying it was going to dive and there was going to be a glut of inventory. Well, whoa, were they wrong.
Well, but
Not that we can gloat on Christmas Day, but we'll do that in January.
But 2015 did start off slow, so some of those predictions it was getting a little sketchy if we were right or not, because it was very slow the first quarter.
Well, the proof's in the pudding. You know, you don't make it in that first quarter. And we have no inventory. They kept saying the glut's going to come, and then you'll be able to have a great buy. And the buyers hung out on that fence, that proverbial fence, Joe, and it didn't come.
No.
And then they said your interest rates were going to go high.
And those be interesting as we sit here today. The Fed will be making that decision, but I think it's baked in already. The quarter, I'm sure it's going to be, again, it's not directly tied to the mortgage rates. Typically when they raise, that means the economy's doing better, things are better. But I don't know. I still think that we're going to have some good money, when I say that, low cost of money for the next year or so.
And we've got a forecast coming up New Year's Day.
Yes, we do.
On real estate and mortgage and all the things that are going to be happening in the real estate industry in 2016. And we're going out on a limb and making 5 predictions. Good luck, team.
Well, let me just add my voice to this wonderful holiday best wishes program that we've got going here. And to remind our listeners to read our blogs and to respond to the social media communications. You know, we've got great people working with us for those.
Do.
And the podcast, you know, we always appreciate any feedback because we don't get better, then we can't bring better stuff to them.
Right.
So we all have to get to our clients, make sure that we know, you know, what they've done, where they're going, who they want to go there with, how they plan to get there. And I know I don't want to jump into our 2016 program. So I will let that go as it is. But you and I, Joe, we've got a lot to talk about with this lending stuff.
We do, and we're going to certainly get to that in the next show. But there's you know, the other thing, lastly, and you just mentioned it, Bobbi, I think for those listeners, if you do have a topic or something's on your mind, it's great. As Bobbi mentioned, email us, contact us through social media, let us know. There's a lot of stuff going out there. We have experts on a regular basis. We spend a lot of time doing our due diligence and research, but you never know, so we want to hear from you for sure.
Okay, so the top 5 trends for 2015. Prices did increase. It was definitely a seller's market. Continued throughout the year. Got a little slow, like a screeching halt in the middle of July, but I really think that was because we are so affluent. Many people out of town. Right. They either went to Hawaii or up to Tahoe or somewhere, but they were not here buying property. And then in many places, the inventory reached dramatic lows. We'll talk about that. The mortgage rates, as you said, stayed very attractive.
Absolutely.
What were they at the beginning of the year, Joe?
Well, at the beginning of the year, they were, I would say, if we're going to do comparisons, we're right in the neighborhood of around, 3. Let's take a 30-year fix, conforming 417, assume decent credit, those types of things. 3 5/8 to 3 3/4. But now, as we sit here today, you guys, you could still get that same money for just under 4% still. So up a little bit, but still, let's face it. Again, we've talked about this before. When it goes away, I'm not sure if I hope it doesn't do it soon, but we will regret it because this is some wonderful money, cost of money. Yeah.
And then, of course, homeowners got an equity boost.
Yes, sure did.
Because, they kept saying underwater, and now you don't hear that. And then many first-time buyers had a very, very difficult year, and it was because they had to get loans and they were competing with the all-cash buyer. And I have to tell you, this week is proving to me why I like to take all-cash buyers, because the lenders are making a mess of the market again, and it has everything to do with all the new rules.
Not Joe's lenders.
That's right.
No. Oh, not you. There's a little love fest going on here. I know you're the best. I know that, Joe.
Some people with big names.
Big names.
And the initials WF.
Uh-oh.
I'm to tell you, they mess up another one of my transactions, and I'm going to have a meeting.
Well, this is, and we're going to get into more detail, I know, but real quickly, that is just another example that the three of us talk about on a regular basis and how relationships are so important. Don't do business with the bank. Do business with the person you trust, because the person you trust is going to drive that transaction, right?
That's
really what it comes down to. Yeah.
Yeah, with some of those larger name institutions that get thrown over a wall to some people that apparently don't know what they're doing. It certainly seems that way with some of the response we get. But
I think they've gotten so big, and they pull in all the other big, like your Genentechs. They pull in your Gileads. They work with the so-called reload departments, Joe, and they lose touch with the consumer. It becomes a widget. They're not a human being with a family to move. They're a widget. And when you start viewing people as widgets, I have to tell you, things all unravel. But, Buddy, let's get on another little, tell us the price story.
Okay, so let me add my best wishes for a fabulous holiday season for everybody. But let's take a look. The National Association of Realtors, which really holds most of the data that's truly accurate here around the United States, their facts point to the price increase levels around the United States. And we tend to be focusing a little more nationally and globally these days just because the podcasts, people are tuning in from China, from Europe.
That's cool, too.
That's very cool. Yeah, so that's exciting. So let me give you some of the national insight on what happened in 2015 versus 2014. Across the United States, the average price increase was 5.8% across the nation here. The Northeast was 1.3%, not a super big jump. The Midwest was 5.7%. The South was 6.2%. And guess what? The West was 8.0%.
Wow.
So we were substantially ahead of everybody else. And I don't think that was totally representative of the Bay Area. That's kind of the big general overview. So the continuation of the upward price trends have served the homeowners well for the last 5 years. Bobbi, all of your 5 are closely related. How about we jump to those low interest rates we were talking about, Joe? Give us some of the look-see back into 2015 and how things went.
Yeah, as I review this and we talk about it today, I think our predictions were accurate. I mean, there was a thought back late 2014 that, we did have a conversation that we thought rates would come up a little bit, the Fed might make a move, but because of some of the things that happened in the marketplace and actually globally, if you remember in China and some other things, was one of the reasons the Fed held off. So as they raise, interest rates are still very, very good. What I would say, and just as important as rates, you guys, you talked about this equity, the equity growth. A lot of people were underwater for many, many years. And so the other thing I want to stress as we move along here is not only the interest rates are still very, very good, but it is a great time to consolidate a first and second. A lot of people were burdened with a second loan. Mm-hmm. And see, now as the Fed raises interest rates, those seconds will be affected immediately, unlike your fixed 30-year mortgages. So this is another message to get out to people. If you have an equity line of credit, now is a great time to roll those together, combine those. Or it's also a good time to, if you want to do some things on your home, get some equity out at the same time, to do that if you were kind of equity starved for the last several years.
Yeah,
Mm-hmm.
yeah. This is an opportunity now in a lot of different ways.
As Buddy mentioned, these are all interrelated points, but price increases are very much a matter of inventory shortfalls.
Right.
We just don't have it. They, meaning the banks, wouldn't lend to our builders. Therefore, they stopped building, and now everyone's trying to play catch up. NAR stats told the story about the West Coast increasing, at 8% overall. But I have to tell you, if you reduce that just to this Silicon Valley and along the coastline, Joe, you're going to look at more of a 20% increase. That's what I see.
It's amazing.
It is amazing, and it's been 20% since the beginning of the year. And that's because if you have one beautiful car, one Ferrari, you can charge anything you want, right? You just have to find the buyer that wants it enough to pay.
You do. So with that, let's take our first break. We're going to come back and we're going to continue this. There's a lot of good information. We're reviewing 2015. Check in if you have any questions. Let us know. Email joe@reradiolive.com. We'll be back to continue.
Live.com. Again, your host for Real Estate Radio Live, Joe Kuchera.
Welcome back in. Thank you for joining us this afternoon. You're listening to this show on a Christmas day, and we hope you're enjoying time with your family, friends, and loved ones, and also for doing a little bit for those that are less fortunate. Most of us, as we move along, we're talking about a review of 2015, but just as important, I know all of us give back. All of us really spend some time during the year doing some things that are people for groups that are less fortunate. So it is nice to be able to spread that word as we have a voice on the radio, and it is nice to be able to remind everybody to do a little bit, set some time aside for those that are less fortunate, and there's millions of different causes.
Absolutely. There are just so many causes. Too bad we don't have. And don't get me going on how some of these churches and groups keep their millions and bazillions in their basilicas instead of spreading it out through the world. I would go in and just take it all and just send it, Joe. What's
great about this, and there's no right or wrong with this, what I love is for those that, I agree, some of these big organizations, we go on and on about the percentage of the money that goes to administrative costs.
Yes.
Pick a family. Choose someone. Go help them. Get that money directly to someone that could use it. That way you know that your money or your time is going to something that is important to you.
And go online and look at that pie chart. Because you can see when you look, I love that pie chart. You can look
how
look
much
up,
goes to administrative
the charity,
or how much goes
and then
to
when
the
that administrative
cause
comes up really big, it's like, we got to whittle that down before I send cash.
Well, we've got a bunch in all across the Bay Area that are pretty effective in making sure that things get to the people that need it most.
Yeah, and the last thing I'll say about that, I want to remind everybody, we have giving back segments we do on a regular basis, especially during the holiday season. So if you're out there and, you're heartfelt about something, an organization or something you'd like us to say something about over the next couple of months, we'd be happy to do it. So you could check in and do that. Again, text 650-346-5352, or you can email joe@reradiolive.com. All right, so let's get back. We're going to talk about inventory, lack of there, contributed these factors, some of the economic moves, Bobbi, you're going to talk a little bit about.
Absolutely. Well, the economic moves and growth are the biggest factors. And economics in 2015 added to measurable impacts on most of the segments, because we had a slightly improved GDP. I'll tell you, the prices are pushed upwards dramatically because job growth was so strong here in Silicon Valley. And it was strong here because we've got all of these companies that are building and growing and trying to make a difference. And it's going to continue to grow because cybercrime is just so high up there. Encryption, all of that stuff that, gosh, buddy, was it 15 years ago we went to Florida to do some research on the encryption down there?
Yeah, we were doing some of my consulting work for a security company.
And now it's
doing very well
Joe.
these days, by the way.
Absolutely. You've got to encrypt everything. So, I mean, we're going to always be... Well, you can't always, because there are factors such as earthquakes and stuff that could put a little tight damper on it. But for the most part, we are very fortunate here.
Yeah, and job growth has been actually pretty decent across the United States this year.
Yeah, and then you have the serious movement of cash. We need to talk a little bit about that. We're going to take a break in a minute or so, but we'll continue this. But, cash buyers, Bobbi, you mentioned earlier in our conversation today how it impacted the market, the first-time home buyers. But let's face it, there's a lot of money coming from overseas in areas that they feel like they could get a better return. So we have Chinese investors, a lot on the West Coast and New York, Canadian buyers also representing some of that. And the story, I'm not sure if you shared the story before we take a break, or was it on the show I heard that someone was, the Chinese buyers, there was an example of a person buying in Palo Alto, and the quote or the thought was, the question was them, why? And they said, well, I'm going to plan, when I'm planning for my children, I want them to go to Stanford. Was it you telling me about that?
Yeah. Well, I remember.
It turns out the children were either weren't born or just born, but that was the plan. That was the thought process.
They think way ahead.
Amazing.
Yeah.
You've got it.
They have a long-term view.
Yeah.
Instead of our stock market 90-day or 1-minute view of the world, they take a long-term view of what things should be done and how they should be done.
Right.
Yeah.
All right, we're going to take another quick break. We're going to come back, and we're going to continue a little bit about the growth and the biggest factors. Usually we'll continue through that and much, much more. If you have any questions, again, Joe at reradiolive.com or text 65 afternoon. As you're listening to this show, it is Christmas Day, and we want to wish all of you wonderful holidays and hopefully a safe and relaxing time. As we do that, we are rolling through 2015 Real Estate Market Review. And we're a little bit proud of ourselves because we did a pretty good job in advance, right? Late 2014. I think our predictions went pretty well. And we're making our way through that. So if you have any questions during the show, the best way is a text for 650-346-5352. Or you could always email Joe at reradiolive.com. I think, Buddy, you're going to pick up where we left off.
Back on the inventory issues. You were talking about the Chinese. They surpassed the Canadians last year in the most influential and the most money pouring into the United States. We're going to talk in our 2016. That may change a little bit, and we're going to talk about it when we do our forecast on 1/1 for 2016. But another one of the issues that hampered real estate inventory, created problems, was the government's other unintended consequences took effect. So the tax bite on anybody trying to sell a home that has a lot of equity on it, here in California in particular, is messy. 38% on that net equity could be taxed for long-term capital gains. So that means people that have a beautiful home that they've lived in for a long time have to really think twice before they sell that property because of that particular issue. So that continues to make it tougher for first-time buyers because those people will move to a rental.
Right. Yeah.
And not even the first-time buyers, but we're running out of luxury, really different looking, unique, like some of the old houses. The luxury, because what they bought for $450 20 years ago, Joe, 25, 30 years ago, is now around $4 million. And so they get their $500,000 forgiveness.
Wow.
They've got $300,000, $400,000 sitting on the table that can be taxed at 38%. I mean million. Yeah, sorry about that. $4 million at 40% is
that's
a chunk of change. So what they're doing is they're moving into the assisted living facilities and they're leasing their homes for $15,000 a month, $16,000. And you go, wow, who'd do that? Silicon Valley,
amazing.
No inventory.
Inventory.
You want a beautiful home and you can't buy one?
And they're going to have to wait until one of them passes away before there's a step up.
Yeah.
So that with the fact that they weren't building for the last 4 or 5 years, Joe, we've got a gunch. We don't have the inventory. We need to keep a nice, healthy pace going. And, Buddy, why don't you talk about the homeowners and how that's changed for them going from underwater to above?
Yeah, so there was really some wonderful news for those people that were underwater. The rates with no positive equity dropped dramatically since the worst of it, down from 28.6% in 2012, although Zillow said that was 31.4%. Why are they always different?
Don't believe Zillow.
I don't know. To under really 14% across America, and under 9% so far here in the Bay Area. Probably even less than that if you really peel it back to some of the outlying areas pulled out. The total value of household real estate reached $21.1 trillion so far in 2015. That's still $1.4 trillion or 6% shy of the 2006 record.
Wow.
Isn't that interesting?
Yeah, I would have.
So we haven't topped out
yet.
That's amazing.
It would be interesting to look at that, by areas, though, right?
Oh yeah. Well, that was national. You people here listening in Silicon Valley, that was national.
In Podunk, where they get snow 6 months a year and tornadoes the other 6. I mean, that's just it. They average. There's no such thing as an average, right, Joe?
Right. That's true.
Just no such thing. You either are in a wonderful area or you're not.
Yeah, so, we talk about some of the things you can do, but be a little careful. Get your CPA, your tax person, your first time, particularly for anybody that's got these equity issues that we talked about before. You want to make sure you're doing the right thing. And Joe, you've actually got a couple of solutions that you've talked about for some of those equity buyers, but we'll have to cover that in the next section.
Yeah, so when we come back, we're going to take another quick break. When we come back, we're going to talk about the first-time home buyers, behaviors, statistics around that, and much more. We're having a lot of fun here on Christmas Day. We'll be back.
RadioLive.com. Again, your host for Real Estate Radio Live, Joe Kuchera.
Welcome back in. Joe Kuchera with Real Estate Radio Live. We are, if you're listening to this, hopefully everybody's listening, and you're hearing that wonderful Christmas music in the background. It is Christmas Day, and Bobbi and Buddy and I are strolling along, recording this. Guess what? It's not Christmas Day. But you're hearing it on Christmas Day.
And
like
there's Bing. It just isn't Christmas without Bing.
All of a sudden, I got this visual of a fire.
Yes. And the snow.
In a fireplace, by the way.
Yes.
Just to be clear.
And just so you get this, it was in the movie called White Christmas, guys.
I'm dreaming.
Oh boy.
She keeps
We'll see what that does to the ratings.
She keeps taking away my Christmas spirit.
All right. Well, we're going to circle back. Buddy. We are discussing today and having a really good time 2015 real estate market review. We're going through that, taking you through that, but at the same time, just reminding everybody to spend some time taking care of yourself, your loved ones, and restful time. Get ready for 2016, of which we'll have some good stuff for you there too. So we've been talking a little bit about, Buddy talked about the homes underwater, the statistics around that, some of the growth. We're not quite back to the levels of 2006, but we're getting close. And one of the biggest factors here has been the first-time home buyers. And here in the San Francisco Bay Area, boy, watch out. It's unfortunate. With all the good news we've talked about before, we've discussed this before, you guys, that we have all these wonderful statistics and the home prices going up and a lot of people, the strong business economy here and the venture capital, we go on. But the thing that it hurts most is the first-time home buyers. And so we're going to chat a little bit about that. The National Association of Realtors survey showed that the share of first-time home buyers declined 32%. 32%, which is the second lowest share since they surveyed since 1981.
Wow.
So that's remarkable.
Oh, that is.
It doesn't surprise me, but it still is like a right in the forehead. Here it is, right?
And that's across the nation.
Yeah.
That's across the whole nation. That's a big impact.
Okay. I
What's your
was
prediction?
going to predict, but I'm not going to predict on Christmas. Let me just say it's going to change in 2016.
Well, we are going to do predictions on 1/1/16, so tune in.
But for all of those, and I have to tell you that a number of clients that I have talked to, because I love to call them in the holidays and just thank them for all of the help they give me, and Buddy for being so successful. I mean, they're just, without them, we wouldn't have the numbers we have. And they all said, I want a nest. I don't want to go to big events anymore. They're afraid, a little bit afraid, so they want a nest. And to all of those first-time buyers who were able to get their nest in 2015, congratulations.
Yeah,
and there was
I
some.
agree.
Joe, you helped a bunch.
No, I did, and we hope to help more in 2016. And I know that those are statistics that are national, but it seems to be more effective with us because of what's going on here and the cost of living and all the different number of things. But, I notice also 40%, they say 40% of the primary purchases are typically first-time home buyers, over an average. So that's a big chunk.
Long term, it's 40. So if you only have 32, that's 8% missing.
Wow. Yeah.
That's a big number, too, of people when you apply it against the data.
Yes.
Yeah.
It is, and then of course you have some of the first time. Some of the financing you guys some of it has come back. I'll have to say for first time home buyers. Of course, still have FHA, 3.5% down. There are a lot of programs, 5% down, which mortgage insurance is built in, but nonetheless you could get one loan, and you could still get financing with less than 20% down by doing a first and second loan. So there's some things out there that are the picture's brightening a little bit. I'd hate to say it, but underwriting still, we talked earlier, across the board, unfortunately, it's pretty darn conservative. And we're going to have to deal with that for a little bit longer, too. I don't know that that's going away. I think it's maybe softening a little bit, but we're still going to be dealing with that for a while.
Yeah. We've got some 2016 information about that some things that Freddie and Fannie are doing that might be interesting, hopefully, for the first-time buyers.
Yeah.
Get them back in and get, they're the ones that were my first-time buyers 30 years ago. And they bought up when they had kids, and now they're buying down because the kids are gone. Then they're going to buy back up again or get that second home so the grandbabies can visit. So, there's a whole thread. It weaves this is going to be great for Christmas. It weaves the fabric of the family.
So speaking of mortgages, you guys know that potentially the next big challenging issue that could face our economy is student loans.
Yeah, that's been one of the problems for those first-time buyers.
A lot of debt. I'm seeing a lot of financing now where you're pulling credit reports and people you're burdened with a lot of student debt. And a lot of people think that that's going to be a big issue going forward. We'll see, but that's a lot of money. You're talking about $150,000, $200,000 in some cases. And by the way, there's a couple of things there. It's not the 1% and 2% like we used to see, number one, and number two. A lot of people don't realize still to this day that that's something you can't walk away from. You can't file bankruptcy with student debt.
Sorry, that's government. That's government regulated stuff, ladies and gentlemen. And I know I had a daughter, Dr. Sopay. That was $250,000. Some of it had to be borrowed.
Yep.
And all of it has to be paid back.
Well, I think the millennials now are getting into that age that they want to settle down. They've been with mom and dad. Now they've met somebody, and they want to go out and have their own place.
Families.
Yes.
I think one of the things that we'll point out going forward is that the buying cycle is a little bit later, not so much in the 20s,
Correct.
much more in the 30s, when they can get a little more control over that debt. And you always help, Joe, people think through their debt situation, what they can do, and to try and mitigate it as best as possible and get their credit scores working beautifully.
But the key is, Joe, you got to get them to listen to
Yeah, no, absolutely. And I would say that as we get ready to take our next break is that one of the most important things is to educate these people. You'd be surprised how many times someone called me or emailed me convinced that they should do something, and after several meetings or conversations, because I didn't back down, they end up changing their mind because, it's my job, just like it's your job, right, to educate people. And sometimes that means challenging them. And not, you know what I'm saying?
Yeah,
I mean, sometimes
the new BMW can wait.
Yeah.
Your 2-year-old one is fine.
Yeah. And we all know about the average retirement and what people have saved. So there's obviously some people could use some education in that area. So, all right, we're going to take our last break. We're going to come back and finish up our 2015 review. And it is Christmas Day. Joe Kuchera alongside of Bobbi and Buddy will be back with you.